All right. So this is a video on my experience on my recent trade, which is the USD JPY recent trade. So what did I see for me to to take the trade and how the trade actually played out? So I'm doing this video to for me to reflect on the reason why I made the trade and why the trade really works, and to learn from it, um, so that next time I can do better. That's the essence of this video. And I guess if you're also watching this video, you can pick one or two things to learn from it, and for you also to that will help you to make a good decision on your trade, and to learn what actually moves the market. Okay, so this is a USDJPY. As you can see, the catalyst for this trade, the BOG, Bank of Japan. Um, so they've been signaling that they're going to hike rate um, for the first time. Um, this is the first time after a very long time. So markets have been expecting BOG to hike rate for a very, very long time. They've been anticipating it, but the BOG wasn't ready. And whenever they anticipating, so this also causes volatilities in the market, right? Um, you know, Obviously, because JPY has been it's in the very low interest rate for a very long time. The JPY is really, really weak. It's been like, you know, crashing for a very long time. So now, um, before this trade, this signal were coming that they're gonna hike rate in the next meeting. So market started preparing for that. Market started pricing in for that. So I was getting ready. I was looking at the chart. I was looking what's going on the chart. So this is the chart of the trade. This is the 4 hour time frame. And it was here that I started to see the movement of USD JPY going lower. So you know, Also the USD, there's no way we're gonna talk about USD JPY without talking about US dollar itself. So what's going on with the US dollar is that the rate cut is also coming up. We all know that when they're trying to cut rates, there is going to weaken the currency there, the currency of that country. They're trying to cut rate. So Federal Reserve's like, they're looking at all their data to indicate to them that they need to cut rate. So, and then the markets, have been pricing in September rate cut. If you look at the Fed wash, this is the where you can look at, the what the market is expecting in September, which is the September 18, when the Federal Reserve is going to meet to cut rate or to hike rate. So is already anticipated 75% already anticipated that they're going to cut rate. So this is already kind of coming to the market. We're anticipating it. If you go and look at the US dollar index, it seems in a bearish um, you know a state. It's been vulnerable to go down. So why, since I'm aware of these things, so I'm just telling you these are the reason why market move. Anticipating this, fundamental or macroeconomic situation who put you in a very good position to see the market where it's going. So I know that is going on. What I know, I'm aware what is going on with BOG. I am aware what's going on with US dollar. So the next thing is just the technical part of it to see. So so this technical analysis to then see, okay, where to get in, where to get out, right? So, and if you look at the chart that I put here, so I already see that it's going down. It's going down. The USDJPY is going down. So once it pull back, you see this little pullback. Yeah, and I see the bearish candle. This is where I started positioning myself and getting into the trade. So, and the trade works very well, moved in my direction. On the, as soon as I entered this trade before the BOJ, um, BOJ actually cut rate for that day. Um, so if you look at if you look at what's it called, the Forex factory. So the Forex factory on the day that they actually cut rate, which is this. So they cut rates on that day, and they actually, even though it was priced in because it was something that was really anticipated, and then some market didn't actually believe that the BOJ is going to cut rate, but they eventually cut it. So that also helped this trade to actually perform well. So as soon as they cut it, the quantities just went down. I took some profit. This comes with the trade management. So I took some profit around here. I took a little bit. I took, like maybe 70% of my position. I took it out around here. So I just banked that profit and I let the rest to run, continue to run. So yeah, so those are the key things for this trade. The fundamentals, and you can see the daily time frame in terms of the technical analysis. As you can see here, there is this bearish. It has shown me here that is bearish on the daily, which is a strong indication, and they pulled back, and they couple with everything that's happening around the BOJ and the Federal Reserve for the US dollar. It makes sense why these things moved down, worked very well. So that's the lesson from this trade. So look at the fundamentals, look what is going on, be aware of what is going on with the currency pairs, the currency that you are trading. Once you are aware of what's going on there. We are aware of what the central bank is saying. We are aware of what the sentiment, what the market, our market is positioning, and you look at the technical, and the technical is saying it. If these two matches, if these two matched, then I have a trade. Then I have a trade. Volume is there. Show there's a volatile, and then you have it. You just need to take the trade and then manage to trade accordingly. So yeah, that's it for this trade, for this video. So yeah, if you have any question, you can put a comment there. I'm happy to go through with you. Thank you.